All right. What is going on, YouTube and Discord family? Welcome back to another edition of Top Down Analysis with ET Hobbs. Uh, shoot. I mean, what is there to say besides wow? What a crazy month it's been. I mean, first of all, thank you guys for showing up. If you like what you've been seeing, please hit the like, hit the subscribe button, all that good stuff. But I'm just here showing my sharing my top down analysis, sharing my journey. Um, make these videos for the Discord, and then I post them on YouTube here for free. So top down analysis last week was spot on to the bullish side. We give a bullish, we give a bearish projection, either direction, and I give you like what my analysis is leaning toward, what my bias is leaning toward as well, right? And I give you weekly projections, starting with the breakdown of the monthly candle. I usually start with 3 month, break it down from there all the way down to about the 4 hour, and then I bring out my levels. So if you like that, strap in. Like I said, hit the like and subscribe button. Let's get right into it. So like I said, it's been a crazy month of buying and selling, right? All of April, March and April, right after the FOMC and the auto tariffs announcements, all that good stuff, all that happened in March. The market found a way to drop all the way back down to October 2023 prices in 2 months, right? Which is incredible. Like that's an incredible drop, right? Incredible on all instruments. But what's even more incredible is that in a month, in 30 days, we were able to get from 2023 pricing all the way back up to roughly where we were in the election cycle, right? November 4th pricing. So we're basically approaching that area. A lot of people are going to be looking to short this, but I got a little bit of a different take. So let's go ahead and start in the top left corner. NASDAQ, S&P 500, Dow Jones from left to right, and then the volatility index. We'll go over some Forex factory news. It's really only one big thing we got to worry about this week. That's Jerome Powell speaking. So I'll make that brief. And then hopefully we can get out of here pretty quickly. It's not a lot of information we got to go over. So let's just start over here. So we're looking over here at the monthly candle on the NASDAQ, right? The monthly candle is telling us buyers stepped up. Like I was saying before, we tapped into October 2023 pricing. More importantly, if you just take a Fibonacci retracement, you drop it from the dealing range, right? From this 2024 high to this 2022 low, we go and just bring that all the way up, right? Look at where we're tapping into. This is what I named my top-down analysis a couple weeks ago when I was like, or last week, I was like golden pocket reversal, right? Or, dump. Well, we tapped into the golden pocket, right? If you don't know what the golden pocket is, it's like 66% or something retracement, 68%, something like that on the fib. You can tell that that's about what this is, right? This is 70, this is 60, 68%. We tap right into that, and then we immediately found buyers. So it makes sense that we're retracing back to the upside. The only question left now is, are the bears going to defend, right? Because if now we take this dealing range, because this is what we broke, right? From this low to this high, will the bears defend this level here, right? Everybody and their mother, you can watch every YouTube video today, and everybody and their mother is going to be talking about 20,357, 20,500, November 4th low, this fair value gap, all of that, right? So we're here to debate it because that's what we do, and we do a top-down analysis. Ultimately, what I'm looking for is I'm looking for a reaction, right? Like at the end of the day, we're here to trade, right? So I expect 100% for there to be a reaction out of this level, right? I don't anticipate the market just rallying straight through this level, right? If it does, then so be it. We continue to trade it. But what am I anticipating? I'm anticipating some type of pullback inside of November 4th low, right? Or you could say inside of this monthly fair value gap right here, right? That's where we're sitting at right now. So what is that gonna look like headed into Tokyo? Well, obviously, if we want the market to come down, we're going to push it up first. You got to go up and create that wick, but we'll talk about that when we get down to the 4 hour. But ultimately, to the upside or to the downside, I don't want to see the market trading too far above 20,700 or 20,686.75. I anticipate the market rejecting somewhere inside of this level and then coming back into this wick just a little bit, right? Like, if I'm a bull, I obviously don't want to see us drop down 4,000 points, right? We don't want to see that. but I anticipate somewhat of a retracement, right, to collect more bulls, maybe back down to 18,984. We'll get more clarification as we break down the weekly candles. But ultimately, the market could just gap and keep going, right? Break above all these highs, right? We get something like this. Right? Not to keep talking about the bullishness, but we gotta call a spade, right? Like if you still are looking at this like, hey, the bears are still in control, it's like, I mean, I guess there's a path that says they're in control, but ultimately, what type of path would be like more probable, right? The current trend is up. The VIX is down, right? Everything is showing strength. The gold is selling off, right? So what would be the best thing to do? How could you trap and put people in more pain? Was if everybody and their mother is screaming about, hey, we're at this level, everybody has this level. There's no question. Like there's not a trader out that doesn't have this level right here, right? So what do you think the market's diabolical ass is going to do, right? Probably going to run this level, right? Get everybody that's trying to short smoked, probably do it in a low resistance kind of way, push above this level. And once it gets above this level, then it rallies aggressively, stopping out all that we're trying to short, and then come back into this level later. And then that's the buy, right? And then we go higher, okay? So just be careful, because that's something that the market could produce, right? The other thing is the typical, what everybody is expecting, right? We rally up, right? We get a nice rally into this level. We stop at the highs, right? And then we start to descend coming back down and maybe find buyers down here back into 18,900. That's a possibility. I'll be watching for both sequences, but just thinking about how diabolical this market is and has been, it would be smarter for the market contextually to keep the people who are in pain in pain. And if you think about it, everybody that was selling the market in this candle anywhere, selling the market up above here anywhere, right? And then potentially looking to sell up here, all of these people are potentially people that are in pain or going to be in pain. Why would the market let them out by selling down, right? If the market really wants to put max pain is to the upside, right? So just know that. So I'm leaning toward being more of a bull this week. Obviously I'm looking for some type of pullback, right? I'm not trying to buy up here, but I'm definitely looking at, looking for nice, clean pullbacks into structural areas, right? Speaking of structural areas, let's go over to the S&P 500, and I'll give you some of those areas right off the monthly, right? And it's going to be this level right here, right? 55, 54, 50. This is the market getting back above the intermediate swing, right? Holding balance right at this level. So if you get a pullback, you don't mind, you're very comfortable looking for pullbacks back down into the 55, 54s, right? I'm very comfortable long in the market right here, right? Even as high as like 55, 83, 75. I remember this level when we were tapping it right here on September 3rd. I'd love to see the market pull back into this area, and this is where I'd definitely be looking for, nice long opportunities, even as low as this wick right here, right? So right into the 55, 33, 75s. We'll go into the weekly projection and how I'm looking at everything when we come down to the 4-hour candle, right? But ultimately, I'm looking for pullbacks to get long. And if we fail to take out these highs, then my thesis changes, right? i.e., if we tap into this fair value gap on the monthly and I see significant selling, right, and we start to take out lows on a lower time frame, then that's going to change my thesis to be more of a bear. Ultimately, the market needs to react. I need to see the reaction from 57.75 to roughly about 59.03 on the monthly time frame. So this could take some time to play out, right? If the lower high is going to be placed, I'm anticipating it being placed here, right? I'm completely comfortable with the market running this and supporting the bullish thesis, because if it does that, then like I said, just like on the NASDAQ, we rally above this high and then we come back and retest and go for all-time highs. But if it fails here, right, this would be the lower high being placed on the monthly, and then we would be seeing a lot more pain, like a lot, right? Like I don't anticipate this whole candle being taken out, but this year, I don't put anything past this market, like anything. So let's take a look at the Dow Jones on the monthly, and then we'll break it down backwards into the weekly time frame. We take a look over here and we see the same thesis, right? We take our Fibonacci retracement from this low, run it up to this high, and we see now that the the Dow has not yet tapped into its 50%. Looking for that 42,483 level to be retested. If we can get back into this level and we can find significant buying or significant selling, right, then that's going to be convincing, right? I need to see it though. Like I need to see the market really react. We have a huge catalyst coming up this week. So I really want to see what the market is going to do. But this is a critical area for the market. We have that same fair value gap, right? If we look here, we got that same fair value gap that the market is putting in, right? Or has to fill, right? Which is what is this level? So this is 42,898 through roughly about 43,485. Now you'll start to see this as we break down the weekly and the daily as a level of interest, right? Like again, everybody that's looking at the chart from a top-down analysis level or standpoint is going to have this level. So just remember when we come up here, if the market doesn't give you that break of structure, then that retest, it's probably just going to run it. If it tries to break the structure and fails and just goes back heavy, it's probably just going to run this high. So we'll see. That could be another 2, maybe even 3 weeks away. But like I said, you just never know in this particular market because it's kind of been crazy. So let's break down the weekly time frame, right? And for that, we'll turn on the 200 EMA, right? And you can see in my previous videos, I talked about this level, right? I talked about the 200 EMA rarely being tested. And when it does, it rarely gets broken, right? You can look back in time, right? And you can see 2023, we tested it, did not break it. 2022, we tested it, did not break it. Even in 2020, during the pandemic, right, we broke it, but we were only down here 3 weeks. And then we immediately got it back above it. The only time, like I've said in previous videos, that we traded beneath it, right, was back in 2008 during the, you know, the crisis of the housing market, right? That's the only time in history on the Dow Jones that we traded below the 200 EMA on the weekly. So that's why this level was so significant. And that's why you're seeing such strong buying, because this is a huge buy signal, but it's also a huge bearish signal if we start to trade below it. And I kept saying it, I was like, if they're going to step in, they're going to step in here, right? Because this is rarely crossed over. And you can see we swept it, we got back above it, we came back down to it again, and then we found buying out of it, right? So that's why on the monthly, I'm so bullish, because we're coming from such a strong level, right? Like, and the 3 month and the monthly, they just look so powerful. So coming off this level, the market is going to be looking to at least take out 43,152, right? Like that's my thesis, right? And look at the candle structure. Just look at the candle structure on the weekly candle. Look how we're closing. Look at the strong buying from the lows from the buyers, barely tapping into 50% of this candle. Look at the strong finish from the buyers, barely leaving behind any wick, right? When you see these signs, you got to take them seriously, or don't take them seriously and start shorting this market prematurely, right? I think that if the market's coming up this aggressively, it's at least trying to target a swing high. And that swing high is going to be at 43,146, another 2,000 points away, right? So when we start looking at the projections for the week, understand that we could go much, much higher. Moving over to the S&P 500, over on the weekly time frame, right? We turn that same 200 EMA on, and you can see the same story being told, right? Nice little tap of the 200, break below the lows, put in a higher low here off of 2021, the April 2021, week of April 2021. And now you see, like, yes, this level is important, but look at the level that we're leaving, right? This was major discount, okay? Discount, premium, demand, supply, I don't care what you call it. Price was on sale down here, right? It was on massive sale. This was Black Friday sales down here, right? And the market did what the market does. It bought a deal, right? So if that's the case, if this is new, if this is discount, right, then that makes the only premium really up here, right? So where's the market looking to go? It's probably looking to tap back into premium, right, where this double top was. So does this level really make that much sense for the market to stop at? I'll let you be the judge, but we'll see what exactly happens. But again, looking at the candle structure on the weekly, we see a nice strong wick at the lows, which indicates strong buying, and barely any wick at the highs, which means that we were unable to find sellers at the close, right? That's bullish, extremely bullish, right? So we'll see how we open it. We could gap down, right? Which will make me very, very bullish, right? Gap down, tap into about 50% of this weekly, even go as low as like breaking through here in preparation for FOMC and then rally it back up, right? But while foot is on neck, I would anticipate them gapping this up and then pushing up a little higher and then pulling back into the gap later on in the week to go even higher, right? So we'll see what the market brings. But moving on to the NASDAQ, which is probably one of the most important instruments that everybody's trading, right? We turn on the 200 EMA, right? And we look at that same level, right? See the same thing. Price was on sale, fire sale, right? They swept it, higher low, boom. Swept the low, came back, and look how high the NASDAQ is. The NASDAQ is already testing that level, right? Strong wick at the bottom, no wick at the top, pushing aggressively above the highs, potentially gapping up, right, to push higher. This could be one of those scenarios where we gap up to start the week, right? And most people will be like, oh, yeah, we're going lower, right? Like, yeah, that could be true. But look at the trend. The trend is up. This is a strong uptrend, right? Like, I don't want to push you into being a bull. I just want to make it very, very clear that this uptrend is very strong. Just looking at the price range tool, right? In 3 weeks or 4 weeks, we are currently up 23%, okay? That is an entire year's worth of buying in 4 weeks, okay? Just to put that into perspective, okay? So these buyers mean business coming out of this area. So I seriously doubt if the people that are buying from here are willing to be placed underwater again. They're more so looking to take out everybody that's going to be looking to short this market. We could just get a straight up V-shaped recovery and go right up to these highs. So sweeping all this liquidity up here. So just be aware of that situation. All right, let's go down to the daily. Let's analyze candlesticks a little bit closer to the price. All right, looking at the daily time frame, leaving that 200 EMA on there because again, now, right, this is the test for the bears, right? Once we got below it on March 4th, I told you guys below the 200 EMA on the daily, we would go much, much lower. We did that, but before we did, right, sequentially, right, if I just take a little horizontal ray right here, I want to show you this. This was the high that brought this low. Sequentially, before the market reverses, it takes out a high, right, introducing a new uptrend. It takes out a high, the swing high here, okay, and then it takes out a low with aggressive liquidation. Put in a new high, aggressive liquidation, before it creates an inverse head and shoulder, okay? If you look closely, the shoulder was really placed up here, okay, at 19,348. Then the market made its head, pushed this candle right here, and do not forget, if you ever want to wonder why I'm so bullish, do not forget this candle from April 9th, okay? April 9th's candle was a 15.85% candle. That is a 2,600 and 2,651 point move on the NASDAQ. That is unfathomable, right? Like, I don't even know if I said that word right, but that is an incredible move. Well, what did those buyers do? Did the sellers take out that low? Absolutely not. From that moment forward, the market played back into this gap, okay? Pushed back into this candle, right? Created a gap up that was massive, like 200 points, got above the high, and aggressively continued to push. So what do you think the market's gonna do next, right? Like, just follow basic structure. If we look at the top of this candle, they already retested this candle. So what do you think the market's looking to do, okay? I'm not a fortune teller. I'm just a person that understands structure, right? If the market has already retested all of this, yeah, it left this gap behind, and trust me, I want this gap to get filled too, but I'm not gonna prematurely chase it. If it did all of this, it's most likely trying to push higher. Will it pull back? We don't know. But right now, you just got to play what's in front of you. But back to my original point about the 200 EMA, this is the line in the sand. Just like I told you over here, once we broke below it, the bears would start to come in. That's exactly what they did. Once we get above it, you're going to see the bulls step up, right? Because the bears will be closing from this level and the bulls will start to push, making a push and closing this particular gap right here. It's a level that, it's probably a few, maybe a few months away, right? But this level here at 22,000 through roughly about 22,144, this is what the market's going to be targeting. This daily fair value gap right here. Now, I say this is months away, but if we're trying to go to all-time highs and continue pushing higher, right? I haven't done my yearly projection yet, but I mean, these 30,000s are up here, guys. I'll just say that, right? Like the 30,000s are here, right? So if you zoom out, right, and you just think about this, every time we have a drastic dip like this, we go higher and put in all-time highs. So when you say like, I don't want to buy at these highs, like just think about the fact that price discovery is right around the corner. We're only 3,000 points away from price discovery, and we just moved 4,000 points in a month. Right. So just think about that before you start saying stuff like that. All right. So moving over to the daily time frame on the S&P 500, right? We take a look at the same structure, right? The market got above the high slightly, okay, before dropping and sweeping the low, creating an inverse head and shoulder that we retested at 55.82. And now we're sitting at the 200 EMA looking to try to push back above this. We still have that same fair value gap up here, right? On the S&P 500, that fair value gap on the daily looks at 61.56 to roughly about 61.2275. That's where I would be looking for a short, right? Before we break all-time highs, maybe some consolidation, pushing back into 58.32, okay? We move over to the Dow Jones on the daily time frame, right? We can see the same type of thesis playing out. The only difference is that the Dow is kind of, it's kind of lagging behind, right? It's got that daily volume imbalance that it still needs to push into and get back above, but it's looking, it's chugging along. It's taking its time, but it's getting there, right? The daily fair value gap that's on the other instruments is very, very faint on the Dow Jones, but it's still there, right? It's exactly where I'll be looking to short the market if we come up here, right? I'll most likely take it on the NQ or the S&P 500, but that's where I'm going to be looking for my shorts, especially once we take out these highs at 43,154, right? So we'll see what happens as we go into those levels. All right. So let me take off everything here, and then I'll pull out my top-down analysis levels for the week. I'll go over my weekly projections, and then we'll get you guys out of here once we just break. I'm not even going to go over the news, to be honest, because only thing you need to know is Jerome Powell is speaking on Wednesday, right? Like that's basically all the news for the week. And then the rest of the week, they have like Gooseby and all these other things happening. Right? There's a lot of FOMC speakers coming out on Friday. But other than that, there's nothing really significant. And I think the market's going to use that, no news Mondays, no news, whatever, right? The market's just I think the market's just going to rally or dump prior to FOMC and then give you the true move, right? Shortly after FOMC. All right. So bringing in a top-down analysis, on the 4-hour, okay, the 4-hour supports a move down first, right? Just looking at the candle structure, right? We look at the 4-hour at the top of trend, we have a doji candle. At the top of trend, I love these doji candles because what that usually means is that it's a spinning top, right? And they call this a morning star pattern or evening star pattern, right? This is the only signal that I'm getting that makes me feel comfortable looking for shorts, right? The fact that we're at the daily supply zone, the fact that the weekly settlement is here, all these are good signs to look for a decent short back to the downside, right? Therefore, like I told you guys originally, as bullish as I am, I'm not a bull up here. I'm more so looking to short the market in this area. So if I'm looking to be a bear to start the week, or if I'm looking to be a bull to start the week, I want to see the market trade down first. Well, if the market's going to trade down first, where is it going to trade down to? We have a few fair value levels that I'll go over in this video. The first one is the weekly fib at 16,69375. I like to see the market trade down, maybe gap up into the daily supply and then push down into the weekly fib, right? That level would send us up about 7.29% up to monthly settlement, and our weekly projection, they actually line up at 21,128.25, right? If the market's going to be bullish again, the second level that I'd like to see the market trade below or get below the weekly fib. And then I like to see us hold this in log at 27 April 2025, right? From 27 April 2025 at 19,554.75 through roughly about 19,534.50. There's also a 4-hour demand that sits right there. There's monthly settlement that sits right there. So it would make sense for the market to come down here and find more buyers. Obviously, it's the high. It's the low that brought the high, and it's a retest of that high off the weekly fib. So if we come down here, I'll definitely be looking along the market, and that would be our nice little pullback. And then to the upside, I'll be looking for about 7.34%. Weekly projection on the NASDAQ, second level would be at 20,990.75, coming off that in wall from April 27th. To the bearish side, I want to see the market trade up first. So if the market's going to trade up first, I want to see us go to the top of this daily supply. There's a weekly settlement up here that we can test. There's the top of the daily supply at 20,526. From that level, I want to see the market come down roughly about 6.99% or 7% to be exact. Coming through and sweeping this demand zone, coming to the low of it and ending the week at around 19,090.5. Same area for the second level. I'd be looking for the market to just briefly tap into the bottom of the daily supply. This is where a lot of selling came in. This is where everybody's going to be looking to get short. So maybe the market obliges everybody and comes down to retest major levels. Number one, our weekly projection at 7.08% at 18,857 is in play. But secondarily, we have that level that I was talking about, the big gap that the market put in. And we have a weekly fib that has not been mitigated yet. Anytime I see weekly fibs that have not been mitigated, meaning we haven't come back and retested them since they were created, right? The market usually comes back and tests it like the next week or the week prior. That's why I end up keeping them on my chart. But this one in specific has three confluences here. We have the weekly fib, we have the new day opening gap, and we have an in wall all sitting right on top of each other. So this is a super buy if we come down here, but it's a very attractive place for the market to go to the bearish side and end the week in a bearish manner, getting everybody super bearish and thinking we're going much, much lower, only to rally up the next week. But that's just my thesis. That's my opinion. But those are my facts. Objectively, those are my stats on how the NASDAQ should move next week. Let's move over to the S&P 500. Again, we'll take off the 200 EMA as we've already gone through that. We'll move down to the 4-hour time frame, and then we'll break out. Well, let me take this level off too. There we go. And we'll break out our top-down analysis levels for the S&P 500. All right. So what do we have on the S&P? Same thing I was saying before. We have this area right slightly above us, right, that the market could tap into, which is the daily fair value gap, right, that I pointed out prior to this. We have the monthly fib that sits up here, 5790.75. So what am I looking at? We're also inside of excuse me. Excuse me. We're also inside of the CE of the 4-hour candle from April 2nd, 2025, the consequent encroachment, right? So we're looking at this level, right? 57.38 through roughly about 57.51 as potential levels for the market to trade back into. Now, if I'm a bear, I want to see the market trade up, maybe to this daily fair value gap. That's where I'm taking my measurements from. I did not take my measurements from the CE. You can very well do that. The percentage is 5.64% from the weekly projection. What am I looking for? I'm looking for the market to come down 5.64% down to 54.75. Right. So now the second level that I'm looking for the market to go from is basically right inside of this CE, right? From the top of the range, right, that sits at 57.14 to 57.24. I'm looking for the market to just push straight down, and I'm looking for about 5.64%, which puts us back at that level from the NASDAQ. Weekly settlement is right here, 5.64% at 5391.25, but also we have the new day opening gap from 22 April, 53.77. We have the weekly fib that has been not mitigated, and we have that in wall. So just like we have a strong draw on liquidity to the upside, we have an equally strong draw on liquidity back to the downside. So whichever way the market wants to develop, I'm definitely going to be looking to trade it, but it's all going to depend for me on how Tokyo opens. If Tokyo opens with a gap and just keeps going, then I'm going to use this daily fair value gap as basically support once we get back above it. So by the time I get ready to trade, I should have enough information to make my final decision on how I want to trade the market. So let's move over to the Dow Jones. right? Again, taking off that 200 EMA. Then we'll break down the volatility index, and I'll get you guys out of here. All right, moving over here. Boom. Okay. So the Dow Jones, right? Very, very simple, very, very easy. Each one of these they're all in about the same area, but they're in different areas, if that makes sense, right? The daily volume imbalance is the level that I'd be looking for the market to push into if it can't get back above the top of the range, right? We got monthly settlement up here. We got, a lot of things up here, right? So what am I looking for? First thing I want to see is the market push up to monthly settlement, break through this DVI, all that good stuff, and then push back down 5% into 40,155, right? If we can't get that far, then I still want to see the market trade into the DVI. I did not measure from the top of the range, so you could do that. You could take that same 5% and just drop it from here. But if we push up into the DVI, I'm looking for about 5.04% back down to 39,762. Again, noting that they have the in-walk here, but the in-dog, the new day opening gap, has already been closed on the Dow Jones. That's something that we're not seeing on the NASDAQ or the ES, but on the Dow Jones is already closed. So I could see the Dow Jones maybe not trading down as low, right? And just holding while the S&P 500 and the NASDAQ drop a little further, right? So we'll see what happens. All right. To the upside, what are we looking for? We want to see the market trade down, right? We have the weekly fib and we have the daily fib here. First level, I'd like to see the market trade into the daily fib, tap into the daily fib and rally up right to weekly settlement, which is this green line here, 5.14% to 43,180. Secondarily level is the weekly fib, right, which is down here at 40,685. I like to see the market tap into this level and rally up 5.19% into the monthly fib at 42,752. We're in a really, really nice area for price action this week. I think we have some really good liquidity draws above us and below us, really nice fair value areas, monthly settlements, weekly fibs, in-walls and in-dogs, right? Lions, tigers, and bears, oh my, right? Like, so we just got a lot of things that the market could gravitate to. So just depending on how the price action is delivered is going to be how I make my final decision. Taking a look at the volatility index, right? On the monthly time frame, we can see that we tried to get above these highs. We tapped into the consequent encroachment, or the CE, of this candle here back from March of 2023. We tapped right into that level and immediately found sellers. If the market wanted to be more bearish, it would have taken out this level, and it didn't, right? That's objective, right? As much as I want to be a bear, trust me, I do. Like, I like when the market sells off. It makes me very happy, but we got to call a spade a spade. We got a weekly doji candle at the top of trend, which is, again, an evening star pattern back to the opposite side. We have a fair value gap that sits right here on the weekly, right? A bullish fair value gap that sits here that would be the draw on liquidity, right? We come down to the daily, you can see that that's where it appears that the market is headed. Until the VIX taps into this 19.6 through about 13.5, which was basically the low that we held all last year, that's where I'll be looking for the market to basically have its turnaround. So I'll be using the VIX to, once the VIX starts to tap in some of these bullish levels, I'll be looking for where the market is in that regard. And that'll give me another key as to when to look for shorts. Other thing the market could do is it could hold this level right here off the 4 hour, right? Because we're not fully through this demand zone, right? This demand zone did bring a new high, right? If we hold this and we hold above 21,940, then that's going to make me lean more toward the bearish side at that level on the daily from the ES and the NASDAQ and the Dow Jones. So those are my levels on the Dow Jones, NASDAQ, volatility index, and the VIX. The VIX, the S&P 500, NASDAQ, and the Dow Jones. Like I said before, I'm not going to go over the news because, again, the news is very minimal this week. The only thing you really need to be prepared for news-wise is the FOMC. Therefore, the market's going to just be moving strictly off price action. Pay attention to the VIX if that's something you follow. I hope these levels help you guys out. But my name is T. Hobbs. This is The Trader Shop, and I'll catch you guys on the next one. Peace.